You are welcome once again. You are welcome once again. Yes, K Trading. And today is what? Our second webinar. And we are going to look at the real nature of what? Market. The real nature of the market. Please, I hope you can hear me. If you can hear me, if you can hear my voice and see my chart, please type hi on the chat session. If you can hear my voice and see my chart loud and clearly, please type hi. Okay, thank God. Okay, you are welcome once again. Thank God, you are welcome once again. Oh. Oh, what's up? Sorry. Please, I'm sorry for the back noise. I'm sorry for that. I think someone has. Please mute. Do not unmute yourself. Do not unmute yourself. Okay, let's start. Let's quickly start. I hope the noise is stopped now. I hope the noise is stopped now, right? Okay. Oh. Why? Sorry. Oh, why? Okay, let's start. I'll use it in that way. So our main topic is what? The rare nature of what? The market. This is the question. I don't know why. The rare nature of what? The market. And we say the nature of the market. The nature of the market consists of what? Two market conditions or the two market phase. So when you open your chart, the first thing you need to ask yourself is what? Market nature. Market what? Nature. And we have types of market nature. It's either what? We have impulsive phase and what? The collective phase. These are the types of what market data. And the impulsive phase. The impulsive phase is is a state of what market moving in one direction, like moving is either moving what if it is going down, you will see the momentum to the downside very strong, and you will see only the what bearish candlesticks. You are only going to see what bearish candlestick, the momentum to the downside will be what creating a void. When we say a void means you will only see only one candle going on one direction. It's either if it's going down, you will see a bearish candlesticks only. Let me give you a typical example from here, from VIX 75, VIX 20, VIX 25. When we say a void candlestick, this is what we call a void candlestick. From here, you can see that we haven't what a bullish we haven't only bullish candlestick. From here to here, we can say that this is what a void candlestick. This is what a void candlestick, and we are saying that the impulsive phase is what whereby market is moving in what one candlestick, moving one candlestick to what one moving towards what one direction. Yeah, moving towards to one direction. So the first thing you need to ask yourself when you open your chart was asking yourself about what the market nature. Are we is the market recently moving what downtrend or what uptrend? So these are the nature we are talking about. And then the second one is what collective phase. So what I mean, what is the collective phase? This is what you call the collective phase. Um, Let me give you a typical example from here. You can see clearly that from here, um, price is what moving. Price is moving. Price what? Price moving to price moving down here. Please can you mute yourself? Let me check the person. Okay, okay, thank God. Yeah, this is what you call the. You can see that from here, price is what moving down here. So this is what we call what the impulsive, and then the collective, and then what impulsive, collective, impulsive, collective, impulsive, and then collective. Can we see that? So on the impulsive, on the collective, yeah, the collective side, we have types of what collective what collective phase. We having two types of what and the way of collective phase what move is whereby price, if there is a market, let me give you a typical example. Let me do some technical drawing here. You may see something like this. If price going up like this, no, let me use this one. If price what moving up like this is what you call what the impulse. The collective phase, you are going to see something like this. Price moving the trend like this, then you get what Budam. Are you getting me? Then the impulsive, the collective, you may get something like this again, moving like this. Then you get something Budam. Then also you may get something like this. Um, you get a strong moving like this. Then you get strong, and then sometimes you get some consolidation here around here, then before what punyam. Are you getting me? So on the collective phase, you're going to face something like you may get a channel, a trend what channel. You can also get an what equal prices. This is what you call what the collective phase. anytime market moving, let's say if price moving a downside, moving what towards to the moving downtrend, the collective phase, this area, oh sorry, this area, this collective area here, you are not going to, from here, this area here, you are not going to get it, you are not going to see price moving strongly there. Your price are going to what, shorten the west, like it will going to create a lows, there will be a lot of lows market, like there will be what, the market noise. You are going to face a lot of noise within that zone. You are going to face what, a lot of noise whenever you open your chart and you see something like this, meaning that price is what, taking retracement or what, moving what, a collective phase. It is moving in what, a collective phase. And those kind of market, we don't what, we don't trade. We don't trade. We only interested if price going down. We are only interested to what, to sell. We are only interested to what, to sell. So when you see an impulsive collective phase, you are going to face a lot of noise. You are going to get a trend channel. It will be like a trend channel, or it will be a what, equal prices, which is a choppy market. These are the types of what, the collective phase. This is how the collective phase move. But the impulsive phase, it's moving what, strongly. You are going to anticipating one candlestick forming that's going strong to the upside or going strong to the downside. The momentum is very what, very high. So the only market condition that we trade is what, the impulsive phase. We don't trade what, the collective phase. Let me give you a typical example again. um let me try and see if, please, I hope you are, I hope we are all getting it. If you understand what I'm doing, please type hi. If you really understand what I'm saying, please type hi. Okay, thank God. So these are the types of market fees. If you open your chart, oh sorry, but you surely get the video, so you don't worry. So if you open your chart, the first thing you need to ask, what is the market condition, or what is the nature of the market? Because there is two types of what market fees. And the phase is what, either impulsive or what, the collective. And then we know that if the impulsive, and we know that we are only interested to what, to trade with what, the impulsive phase. We are not interested to trade with what, the collective phase. So if price moving the upside, if price is moving the upside, we are interested to trade with what, the upside candles. That's the impulse, the collective phase. You are going to face a certain channel here, and it's not going to be strong. It is not going to be what, strong, because it will take, like, it will be how, mini candlesticks. You are going to face a lot of mini candlesticks, and a lot of what, candlestick rejection, which is shadows or weak rejection. And those kind of candles or those kind of markets, we don't trade. So if price moving in this way, we are only interested to what, to buy. This is what we are going to face there. So the next moving will be here, and then it will be jump here. I hope you are getting. The next moving will be here, and then it will be what, jump here. So the middle, the impulsive, this is what we call the impulsive. These are the impulsive phase. These are what, this is what, impulsive phase. This candle is impulsive. This one is impulsive. This one is impulsive. This one is impulsive. But here is what, the collective. This is what, a collective. and we are not interested to trade with collective. Why? The reason why we are not interested to trade with the collective is that collective phase always what moving in this way. It will give us either trend channel, it will give us either what trend channel, or it will give us what equal prices like this. It will give us what an equal prices like this, or it will give us what um um like a certain pattern, patterns. That's either M pattern like this. Then later on it will break out. Then it will price what just scatter away from here. You will see the scatter of what price. It will move in some way that you can't even what identify the structure. Sometimes you can't even identify the structure within that phase. So what we do is that we try to what we try to what capitalize all the markets. We try to what capitalize the market nature, the movement of the market. Because if you open your chart and you saw that price moving something like this, then you see something like this, then later on you see some strong movement to the downside, later you see something like this. What we then later on we are going to face shorty candlestick around here. What you see that we just check the previous candlestick. What is the current market trend? What overall market trend? If the overall market trend is the uptrend, then we try to what capitalize all this phase. Then we consider it as what an impulsive what collective what phase. So those kind of that collective phase, we just capitalize it together. We just combine them together. Then later on, when we see a breakout of the upside, then meaning that the what do you call it? Meaning that the collective phase is what is over, and we are now interested to what to buy. We are now interested to what to buy. So when you open your chart, the first thing you need to ask yourself is what the market nature. So then you may ask yourself, how can you what identify this kind of market nature? Or if also know the market nature, how are you going to use this to what to trade? I'm going to show you right now. What you do is that before how we KA trade identify the market nature, we started from what the higher time frame. That's where we do the top down. When you get to top down analysis, you get to understand it very well. But for now, because we are doing this, you see that this analysis, I know that price is what recently going down. We know from daily time frame, someone may ask, why am I looking to sell on this pair? Why am I looking to sell? And we say that trend development starting from what? When we see what? Right now we have what? A high. This is a high. We have a high here. And we have what? A low here. We have a low here. And we can see that looking at this place, we can clearly see that price created M pattern. It created M pattern. When you go to one hour time frame or the 30 minutes time frame, you can see that price give us what a double top here. And it breaks what the neck here. And later on we got what a retest on the neck, and price what now coming down. So I consider this area as a what a lower what high. I consider this area as what now a lower high. And I opened the chart and I saw the price is what recently on the what a very strong what support area. The reason why I didn't place trade here is that because it is on the support area here, and recently we haven't, the overall trend is what uptrend, and this trend is now developing. This downtrend is what now developing. So it is not telling me to sell here, and it is not advisable to sell here because price can just what create equal lows here and continue the uptrend, break this neck, then give me a retest and continue the uptrend again. So it's not advisable for me to what to buy here. But the what I have to what wait for trend the trend momentum. So the only thing I can wait is that I have to wait for price to kiss this area. The reason why I'm waiting for this area is that there is liquidity here. So definitely price may what get a rejection around this liquidity. There is what a liquidity here. So this liquidity might what go here, then collect some corrective phase from here. Then before what it will give us what the impulsive phase. So I'm only interested to what to sell here. I'm only interested to what to sell here. Now we having what a high, a low, and then lower high, and now it's creating what a lower low again. We have what lower low here, now creating a lower low. And if you want to join a trend, we are not, if you are selling, the rule is that we sell at a lower we sell at what a higher price, and we buy at a what a lower price. So if we am interested to sell here, I consider this price is already a low. I consider the reason why I didn't sell here is that I consider it is what already low. And if price is already low, we are not going to sell, but we buy. And now we it's not good for me to buy because price creating a lower lows and what lower highs. So it's not good for me to buy. So now I'm interested to what to sell only. If I'm interested to sell only, then I have to wait for price to what to give me an the collective phase before I'll join the impulsive phase. So I'm only interested to what to sell here. So if price break this zone, I'll only what take a sell limit here. Then if price hits my sell limit, then I'll ride the trend to what to this side. I'll ride it to what to here. So this will be my final TP. If price able to what confirm for me, this will be what my final TP. So I'm not going to change this trend until I'll see the price on this area before I'm going to what to sell. If price fail to give me that rate test, I will just wait for the next movement rate test around this area. Then I will sell to this area. Definitely, price will create a high before a lower high before it will go down. So I'm not going to change until it gives me that structure. The thing is, if open your chart, don't say that price is going down, so you have to what sell. No, wait for price to give you what a certain. That's what you call what market nature. Market nature is what whereby price is what the way of what price moving is the way of what price moving. So if you open your chart like this and you see that we all know that price is what moving an uptrend around here, and you saw a breakout here, price is going up, it's going up, and people are buying. Immediately you open your chart, you saw something like this, consider the price is already high. We consider it what already high, and the rule is what don't buy at a higher price but sell at a lower price. If you buy here, price can just get rejection here. And if you are using, let's say if you are trading VIX 75 and you are with what do you call it, $100 account or $200 account, and you open an entry here, definitely you may close your trade at a premature. You may pick some heat draws. If you place a trade here, where are you going to place your stop loss? That's the first thing you need to ask yourself. If you place a trade here, where are you going to place your stop loss? Because if you place a trade here, this area don't have a place of what stop loss, and it don't have an area of what TP2. So before you place your trade, you need to have an area of TP and the area of what stop loss, because we use stop loss to what do to detect wrong what setup. No matter who you are, you will still fail because you are not the one controlling what the chart. So definitely you one day what fail. You have to put in your mind that there is part of the loss is part of the game. So you have to what position yourself in a certain way that if your trade pick your stop loss, you'll be comfortable with your loss. You have to position yourself very well before you can manage your account very well and grow. You add money to it every present day. So what you do is that we wait for price to come back, trace to this area, then you start buying from here. Sometimes price can push here, then it will give us a very strong saddle around this here, or it can come and kiss this area before it's going up. The rule is that before we can say that the uptrend or downtrend is over, until we break the recent what. If it is an uptrend, sorry, let me delete everything so that if if we are in uptrend like this, until what we break the recent what higher low. This is the recent higher this is our recent higher low. Until we break this area here, we still consider the price is in an uptrend. We still consider the price is what in an uptrend. Price, if price didn't break this area and come back and kiss this area and go up again, we still consider the price is what in an uptrend. That's why if you look at this here, this is our recent what lower higher low. This is our recent higher low, and later on it go here, give us this one. This is the kind of impulsive I'm talking about. So recently, this is our recent lower high here, and our higher low. This is our recent higher low, and we can clearly see that price able to break this one and give us this one and going down here. So from this market, it's good for us to what looking for sell. So until we break this area here, we still consider the price is what in an uptrend. We're still looking for what buying opportunity until we break the zone and then we get a retest going down. Now we can see that we having what trend development. We having what trend development, or we have a what trend momentum. From here we can see clearly that the trend has what we having a very trend or momentum here. So if you want to trade VIX 25 recently, you have to look for what selling opportunity. Selling opportunity. So before you see the market nature, you first what ask yourself for directional bias. What we did the other day, you ask yourself the directional bias. So the directional bias, is it the downtrend or downtrend? Is it the downtrend or uptrend? If it is uptrend, then you look for what the impulsive to what to the uptrend. If it is downtrend, you look to the impulsive to what to the downside. Do you get it? Please, if you understand what I mean, type high. If you understand me clearly, please type high. Okay. Okay. Thank God. Thank God. So if right after seeing you now you know your impulsive and then the collective. If you're able to identify all this from the higher time frame, if you go to the lower time frame, you are not going to do anything from there. You are still going to look at the same condition. If you go to, let's say, 15 minutes time frame, that area is for what our entry rules, the entry time frames. And one thing you need to notice that whenever impulsive, if there is a collective change, I want to show you something. If whenever whenever the impulsive coming to an end, we will get something like this, a certain pattern. Is either an uptrend, is either what a double top. We will get something like this. Is either we are going to face a double top, or we will get what inverse what head and shoulder. We may go to get something what head and shoulder. We are going to face what candlestick patterns, that are the structures. Whenever impulsive want to get the collective want to be over, if price moving to the upside like this, and this impulsive want to get over, we will definitely get either double bottom around here before we get a breakout. Then there will be one, if that breakout happen, there will be one candlestick. That retest should be one candlestick. If you go to the lower time frame, let me give you live example. I think our time is about okay, let me go to VIX 75. I think can get something there. Oh, okay. Okay, yeah. Look at here. Look at how the price move. Whenever the impulsive want to get over, look at here. Now, if you go to the 5 minutes time frame, here will be a double top here. We will get a double top around here. So we can clearly see that. Let me go to 5 minutes so that we will get the pattern very well. Wow. Sorry. I can't see the actual price. Okay, let me go to that 15. Okay, look at this place. We can see that recently, if you go to the lower time frame, this lows, definitely there will be some patterns on 5 minutes time frame. From 15 minutes time frame, we are waiting for breakout here. But from 5 minutes time frame, we may get an entry around here. So our entry should be around this area. So this bullish candlestick here, if you go to 5 minutes time frame, it is one candlestick that give us this bullish candlestick. And then the next candlestick what gets also gets rejection, then it creates what it gives us what this kind of what low. I hope you are getting. So whenever an import the collective want to be over, whenever collective becoming over, we may get a certain pattern. And if that pattern break out, then we say that it is good for us to make an entry. And whenever that breakout happens, the retest, we are almost sometimes we are interested to buy or sell on the retest. So the retest, if it is impulsive, the retest will be only one candle. Look at here, it is only one candle from 5 minutes time frame that caused this one. So right after that candle, the next candle will be what? A very strong momentum to the downside. So look at this place. You see that the price move without what? Going up, down, up, down, up, down. There's no there's no breaking here. It's going up before what? Giving us what? This impulsive phase again, the corrective phase again, and going down again. I hope you are getting. So you need to what? Position yourself very well. When you go to the higher time frame, then you get your directional bias. If the price reach your interest area, you can what? Go to the lower time. The reason why we sometimes go to the lower time frame, that if the price get to that area, we are definitely going to get a rejection around there, and there will be what? A certain pattern. And if that pattern was break out, then we say price is now confirmed for us to make an entry. It is now what? Confirmed for us to make an entry around here. Then we ride the trend to the upside. Please, do we have any question? I think time is up. It is even over. If you have any question, you can unmute yourself, then you ask. Okay. Mr. Yang, do you have any question? Mr. Victor, do you have any question? Vin.
Yes. So I want to ask a question. During the correction phase,
Okay.
What, what if the price breaks? Now let's say the price breaks to. Is it possible for the price to break too lower? Maybe in an uptrend. Is it possible for the price to break too lower lows and the market should still reverse without breaking structure? And because ideally, when it breaks maybe one lower low, maybe there's a change in trend or something.
Your
But what
line
is
is
it
not
possible?
clear. Can you come again?
Okay, what about now? Is it clear now?
Come again. Come again.
Is it possible for price to break to lower lows during a correction phase and for
Yeah.
the price to
Yes,
still
please.
continue
There's
with
one
the
thing you need to.
impulse?
Yes, I got you now. There's one thing you need to. Some reversing or some corrective phase can be what a reversal. We are not going to get an up. The market is not going to be in uptrend all the time. It will be an uptrend and what downtrend, and some collective like this, the collective can be a reversal for what an uptrend or downtrend. So the time you can identify, that's why we exercise patience for breakout. That's why what we exercise patience for breakout. Let's say we are in what uptrend like this, the collective here, from the collective here. Okay, let me use the same thing on VIX 75, the live trade. VIN 25, yeah. Let me use VIN 25, the live trade. Four-hour time frame. Okay, look at here. At first, we were expecting what? You see that the other day I dropped this setup. I didn't make it in this way. And price breakout here, and we're expecting price to come back and hit this area. So right after price hit here, I sent a signal that we should buy. We should buy here. And I drive the price to what? I drove it to here. This is an area of, I took my profit around here. I took my profit around this area because of this. That's why I took, because the time price hit that area, I experienced some rejection around there. That's why I took my profit. So you can clearly see that this impulsive, this corrective phase here, issue we are expecting price to reject here and continue the upside. But right now it gives us what? A reversal. Can we see that? So some impulsive or some corrective phase what can give an what? A reversal for the trend. That's why we always wait for what? A breakout before what? Entry. We